Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, June 17th, 2022. It's now the 16th at 9:13 p.m. Central Time. We start off in the S&P 500 daily chart in DeMark to see that the combo and sequential buy setup 7 count was printed. And to negate that, for the 17th, there must be a close above 3749.63 for the price flip to the sell setup count 1. Price in the aftermarket hours at 9:14 p.m. on the 16th. The S&P 500 is at 3688. The propulsion momentum down was qualified, and the sequential buy risk level was qualified. So for the 17th, if there's an open lower than 3666.77 and intraday ticks lower than 36.39 and intraday ticks lower than 3639.77 and price stays below the close on the 16th of 3666.77, then those two levels will become qualified and confirmed. Qualified buy risk level for sequential and the propulsion momentum down. Get the qualified sequential buy risk level at 3809.69 qualified and confirmed, then there's more likelihood of follow through down to the disqualified combo buy risk level at 3568.76. And the 50% qualified propulsion exhaustion down at 3672.75 was already tagged. So if the qualified propulsion momentum down at 3924.83 becomes qualified and confirmed, there's more likelihood of follow through to the downside to the 100% qualified and confirmed exhaustion down, if it gets confirmed, that is, at 3168.60. And that is close to the trend factor disqualified down 10, the end of the road for a trend factor. To the upside, it could go the other way and get the disqualified momentum up for 50% and 100% qualified with a close above 3774.69. And to reiterate, the first baby step would be to get the price flip to the sell setup count 1 with a close above 3749.63 for the 17th. And that would really take the wind out of the sails of the buy count. And what's at stake to lose is a buy setup count 8 for the 17th. This is a follow-up for the Japanese yen FXY. The propulsion momentum up for 50% and 100% was qualified and confirmed on this bar here. We'll go through the process for those that are unfamiliar. There was an up close on the 13th, followed by a down close on the 14th, followed by an up close above the level in question, the momentum up for 50% and 100%. And then price on the 16th opened higher than 70.025 and then ticked higher than 70.09. So both of those happened on this bar. And the now qualified and confirmed propulsion exhaustion up for 50% was tagged, and that means more likelihood of follow through to the upside to the 100% qualified and confirmed propulsion exhaustion up at 7191. A sequential and combo sell setup 2 count was printed, And to negate that, for the 17th, there must be a close under 69.68 for the price flip to the buy setup count 1, and a close under the propulsion disqualified momentum down at 69.97 would qualify the momentum down level. And REI has not bumped up off of its negative level here. By now it should have bumped up, so I can't explain that. But the marker 1 is on its way to the oversold 40 line. Rock has already gotten above its oversold line, so if these two can get up above their oversold line, I'm sure this will correct itself and go above its overbought line at 40, and then the yen would be considered to be in a very strong uptrend. So what's going on is the Japan economy and economists have reached their possible ultra pain threshold. As you can see, the 10-year rates for the Japanese bond is at 0.263, while everybody else is well above 1. Germany at 1.7, still way above the Japanese bond. And they're keeping it down artificially because they say they're still in stimulative mode from the pandemic, but their pain threshold is becoming just unbearable. And I believe on the 17th there's a Bank of Japan announcement for their interest rates. More than likely they're going to have to bump it up. And there's a lot pouring into the Japanese yen right now. The accumulation of 115,800 shares is trouncing the distribution, which is at 0. The CBOE total put call ratio shows its KST has no doubt about protection being the order of the day. It's above its signal line and just crossed back above 0, so that should accelerate to the upside. And it did not make it past this lower level here from mid-March. It stopped short and turned around and went back up as I predicted. The S&P 500 support and resistance levels big board chart shows the gray areas at the weekly diamond bottom extension 3688, daily Bollinger Band lower band 3678, and the pivot point 3678. To the upside is the horizontal support line from January 29th, 2021 at 3694. And to the downside is the top of the third former descending broadening wedge at 3653, which was tagged today on the 16th. And price in the aftermarket hours on the 16th at 10:09 p.m. for the S&P 500 is 3683. And we lost another row at the top. We're now showing the 4000 levels, and the NDXT close signified by its cloud lagging line, and you can read about the NDXT here. It closed at 60.55, and the NDXT downtrend line from the middle of March breakout is at 63.38, so it's below that. The NASDAQ 100 daily AD line is below its 21 EMA signal line, as is the S&P 500 daily AD line below its 21 EMA signal line. The ROC 1 had a bad day. It's at negative 3.25 and headed down below its pain threshold, and the ATR2 at 129.70 and pointed up is above its pain threshold at 89.95. And the PPO extreme level got a bit worse today on the 16th, closed at negative 14.56%. And the D wave downwave 5 projection was tagged by the D wave downwave 3. So that leaves the D wave downwave 5 projection in the daily chart at 3299.25, basically 3300. And get past this level here, the horizontal support from January 29th, 2021 at 3694, and move to the upside past the horizontal support from January 29th, 2021 at 3694, and it will run into a lot of resistance starting at R1 3717, trend factor down 4, 3727, monthly horizontal support from 02/01/2021 3723, and the daily channel 3 low 3729.79. And unless President Zelensky over there in Ukraine invites Putin over for chicken Kiev dinner to talk about things and Putin accepts, or President Zelensky cedes the Donbass to him, one or the other, this should hold as formidable resistance in that area. Have a great day.